Welcome one, welcome all to DeFi Crypto and Airdrops. I am Mike, aka Veteran.
He froze right when he did it. there,
That?
there you go, Mike. You froze
He
for just a
froze.
second.
Thank
Oh,
you.
okay. Well, welcome
AKA.
one, welcome all to DeFi Crypto and Airdrops. I'm Mike, aka Veteran Crypto. This is Taylor and Jeff, and Drew should be joining us here shortly. Um, have a really interesting show today. I feel it's really important, especially with the way that the markets have started moving, that we start addressing how we're going to start taking profits and what we're going to do with those profits and how we can mitigate our tax liabilities or our tax burdens. So today we got Taylor from the Willingham law firm who specializes in estate law and also owns a couple of title companies, real estate title companies. And with him is his business partner Jeff, who is, and correct me, I always get this wrong. It's not a licensed financial advisor. What is it?
Well, yeah, I am. I'm a certified financial planner, so I'm a
Okay.
CFP, but I'm also a licensed investment advisor. Yes.
Awesome. Awesome. So basically, we have two licensed experts. And so I don't have to use the disclaimer that this isn't financial advice and I'm not a financial advisor. I have them here.
Yes,
So let's,
but I have to use a disclaimer that it's not individual financial advice, and this is just for educational purposes only. Consult your financial professional. Yada 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 yada. But yes.
perfect, perfect, perfect. All right. So while we're waiting on Drew, I want to jump into a couple of things. Let me share my screen real quick. Let's see. So the markets have been pumping, but I want to share with everyone. I'm going to just put this in front of all of our faces real quick so everybody can see it. There is a lot going on with DeFi right now. So, this is the dashboard for DeFi currently. And we have the TVL in DeFi is pumping right now. We have volumes pumping, all of which is really good. I mean, anybody that's in DeFi right now, you're starting to see your APRs go up. You're starting to see your fees going up. What you're earning in your pools and in your lending is all starting to go up, as well as getting some decent price appreciation. So, you can see RWAs, plays like Ondo, Plume, all that TVL is starting to curve up. So, starting to see some really good things going on there. Let's see what else we got. For the past couple of weeks, and actually a little bit longer than that, we've had started to see Tether and USDC being minted in preparation for the liquidity that was about to be injected into these. There's Drew, injected into these markets. So let's actually place him real quick.
What up?
How's it going, Drew?
Good, good. I feel good. I just was able to slam through a lot of data. Everyone's trying to figure out how high this stuff can go, man. The markets are back. We are back. It appears we have
They
become
are.
rich.
They are. So actually, you know what, Drew? Do you want to just go ahead and take everybody through, just kind of what's going on right now with the TVL and the volumes and DeFi and the markets, and then
Yeah,
go ahead and just move on into interviewing our two guests. I'm going to jump over to the comments and kind of run the comments and bring up any questions that they have.
100%, man. 100%. So basically, what we have right now is a failure to communicate with retail because everyone was selling their bags. It was super fortunate to see now that we've seen Bitcoin. I mean, right here was a lot of capitulation. We hit a max fear level that hadn't been seen since COVID. It was about a 17 on the fear and greed scale. And there was a lot of people essentially calling that this is a double top movement like we had seen in markets past. I'll kind of go to the weekly to better show this essentially. And oh, dang it, it doesn't give me all the. Let's go over here. Let's go over here to the actual Bitcoin chart. A lot of people are thinking that we had seen like a double peak like this previous one. Um, I've been kind of drawing lines the other way with my male astrology, and essentially a lot of things have changed. We have Bitcoin strategic reserves, and I really wasn't of the opinion that this market was ready to just peter out at that level. But what we have is a major, major return of Bitcoin, and with that, uh, absolute chaos has come to altcoins. Now we have altcoins putting up 20% days, and the chaos realm is about to begin. Now I am, in general, targeting this range of the 175 mark in quarter one of 26. I think we got about 180-day extension to the average cycle span of the Bitcoin bull, just because of how much regulatory adoption there is. TJ, he's trying to convince me up into this 220 to 250 realm, but we both agree on the time scale for a litany of different reasons. So essentially, that's where I'm at. The reason why TJ is up here in this upper band is this is the top of the fib extension that we had seen in this market past right there. But we pulled back at a lower fib extension this time in the blue zone than we did last time. So this is the same level, 30% pullback in 2021. But yeah, that's kind of where I'm at right now with it. It's just a
I,
return,
I
man.
I gotta share this. Casper just pumped in the past hour 26%.
Wow. Holy cow. Holy cow. Let's look at it.
Yeah,
Let's
it
look at it.
just pumped. Oh man. Well,
Oh,
2.0
Casper.
2.0 just went live.
Mhm.
Their major upgrade. So
Whew. It's a long way to the top
it's a long way to
if
the
you want
top.
to rock and roll, huh?
Yep, yep.
Wow. Let's see if
Well,
there's any. It's got a higher low.
yeah, no, it still has a way to go to get back to its major. Well, it's resistance now, but it was major support for a long time of 2.5
Hmm.
cents. So,
Hmm.
but it's good to see. But
Yeah.
let's go ahead and jump right in with Jeff and Taylor, because I know that there is a ton of alpha, because Jeff, before we went live, was talking about taxes
Hmm.
as far as crypto, and I know Taylor, you were wanting to talk about real estate and some of the issues that you're seeing with residential and commercial real estate. And I definitely want to ensure that we talk a little bit about your guys' seminars that you do, as far as helping people to structure their wills, their trusts, things like that, to mitigate tax liabilities, to protect their assets, and to diversify, and earn yield on different vehicles, using different vehicles to earn yield. So, Drew, go ahead and take it away, and I'll jump in the chat.
Yeah. I mean, the thing that I'm is on the top of my mind is that the whole intention was to, add to the Bitcoin stack and then potentially buy a rental property or two out of the profits. And I am getting kind of concerned with that, hearing some horror stories about insurance rates and um, essentially, I see that the Fed funding rate's at like 4, but the mortgages are still like 6.5, 7%. So everyone's like hopeful. Like that's that. First, I want to ask you that. Is that art? Because the banks are getting the cheap money and they're not translating that over to home buyers.
Well, they usually have that spread in there that they do. I mean, it's sometimes they've been a lot more competitive, but you got to understand the banking industry is in really, really bad shape right now.
Mm,
A lot of that has to do with commercial loans on the commercial side. Of course, a lot of they what they cannot have is also a real estate disaster or a residential problem on their hands right now.
mm,
That would
mm.
really be bad for the banks. If you don't remember last year, we almost had a banking scare because what was that bank that went under?
It was
Silicon Valley.
SVB, and that was like
That was
2023.
2023,
Yeah,
Yeah,
it was
2023.
February
2023.
23 or
Hmm.
January 23.
Hmm.
Yeah, and so I mean, still they still have serious problems on their books because they have all this commercial real estate that is really, really struggling. But the real disaster is 2026 when about $1 trillion has to be refinanced because most of those loans were taken out in 2021
Hmm.
with really low interest rates,
Hmm.
and they're going to have to refinance all those now. the hope was by this year that the rates were going to come down significantly. So when those refinances start happening next year,
Mhm.
that was going to happen. But the problem is, according to the projections, it looks like over the next couple of quarters, inflation's going to be pretty flat. And
Mhm.
so the Fed's really not going to have, if the market goes up, the Fed doesn't have an excuse to lower interest rates. In fact, it might have to
Mhm.
raise interest rates
Mhm.
to try to bring down if we have this blow off top that a lot of people are talking about.
Yeah.
Well, I'm that's kind of one of the reasons I'm very bullish on DeFi is, just the borrowing and lending. I mean, it's leveraged, just like a home loan or something like that. But like right now, you can lend stable coins, like USDC for like 3-4%,
Mhm.
yield, and then you can borrow for like 5% or 6%. So it ends up being to where you're only paying like 1.7% to borrow against your assets, and it beats traditional finance by a mile.
Mhm. Mhm.
Oh yeah, I mean, if we can get there's a lot of regulatory hurdles right now, not allowing crypto to be the source for which people get their mortgages or refinancing commercial properties. Um, if that can get figured out, it would be a huge. It's a huge opportunity right there because I know Plume is. Michael, you said they're trying to. I've actually tried to reach out to Plume to be like, hey, I want to talk to you guys about how this would work if this was even possible. I mean, they're basing their whole, their whole platform off this idea that you can tokenize real world assets. Well,
Mhm.
here's a guy who owns a title company, and I want you to work with you guys. So I'm reaching out to him on LinkedIn, but I don't know if their guys are on LinkedIn or actually paying attention to that.
I'll actually, maybe me and Drew can help out. We'll reach out through the channels that we have, and see what we can do. But yeah, no, it's Plume is more. It seems like that they're doing some onboarding. Ondo, they're working with as a partner. Plume is kind of the picks and shovels. It's doing more of the functionality, like adding functionality to Ondo and projects like that. Whereas most of the RWAs would be tokenized, my understanding, on you know uh, chains like Ondo.
Okay.
Plume is just more of a interoperability and those sorts of things.
Oh, so that
Something.
so the other thing I want to talk about what's going on right now is the new loss mitigation tool that the FHA has been doing in order to um, prevent foreclosures from taking off.
Mhm.
So currently, right now, just if you're financially struggling out there and you are more than 90 days behind, the bank, as of January 1st, is supposed to tell you of this program that if you have an FHA loan first. So it's an FHA loan, you get more than 90 days behind. The FHA will bring you current on, and then going forward for the next 3 years, they will pay about 25% of your profit your principal and interest payments.
Mhm.
Um, and then after 3 years, but it's not free money. It is money that you don't have to pay interest on, but it will be tacked onto the loan when you go to sell the house.
Mhm.
So you don't have to repay that.
So it'd be kind of a lean.
It is a lien that they're placing on your property, which, a lot of these people don't understand that when they get on these programs. They think, they'll talk to a friend and friend will say, the government's paying a quarter of my mortgage. And they don't understand. Well, yeah, but you're going to have to pay that back someday. But it's designed to kind of help people out if you start falling behind. But it's even though because people are kind of looking online and they're going, hey, well, the foreclosure rates aren't really going up, but defaults are. But people can't really figure out what's going on. Well, it's because there's this new program that's out that's basically keeping people out of foreclosure.
Mhm. Mhm.
So that, of course, is going to last over will last for 3 years. So,
It sounds like forbearance. Remember that forbearance program? It sounds a little bit like that in
oh,
COVID.
yeah, because there's serious problems. Which this is the problem with the government that we have. The problem is house prices are too high,
Yeah.
and the way that you fix that is you increase the supply. But then the government injects itself and prevents the supply from being actually injected, which is foreclosure. Like
Mhm.
that's the purpose of the foreclosure is, okay, you couldn't afford this house, we're going to foreclose, we're going to put it back on the market, and then drive down house prices so people can afford it. But the government can't help itself to interfere and always cause things to get worse, because all this is going to do is delay the problem, and it's going to then push it out to 2028. And then the taxpayers are going to end up having to take the losses on these, because these are second lien positions, which is always interesting that the
Yeah.
government has to take a second lien position to the banks. So
You know,
I- yeah,
there's
so
so
I
much
wanna-
I want to ask you about this, though. It's like, so you mentioned the commercial real estate's underwater, and you're kind of describing if they have to raise rates instead of cut, like we all hoped, like because the the Fed CME tool is now registering that there's going to be like they washed away the likelihood of a lot of different rate cuts that we thought we were going to get, like in June and I think it was October. Like there's supposed to be like 4 or something like that before the last meeting. Now I think there's only like one that I could see that's like actually strongly thought to actually happen. Um, there is a thought in my mind that comes. It's like, so we saw the forbearance happen. They're using all of this capital to keep the forbearances from happening by kind of padding that out and putting a lien on the property. But there's my mind is spinning right now with so many different things because like I have this loan that's at a 3% rate. It's basically like taking a 30-year short on the dollar. I'm kind of terrified to pay it off. Like in comparison with these current rates, like if what you're describing continues to unravel, that would be absolutely insane to like have to get another house at like 6 or 7% when I'm used to these 3% loans. And what does the average person do? Like that's where
yeah, the problem is like people can't afford the houses. What's happening in with our title company, about over a quarter of the houses that are being purchased right now are large corporations.
Mhm,
They're
mhm,
not regular people. They're corporations that can borrow money at low interest rates somewhere else, and then they can come in and buy it, because people can't. We're in the DFW area where we're located. We are 40% over where the housing prices should be based upon inflation rate and everything. So we're way over. Like, and in Texas, that's a significant problem, because not only that also raises your taxes, that
mhm.
raises your insurance, and so we're creating a big problem for Texas residents. So Texas is actually experiencing a lot of people leaving because they came here because we didn't have state income tax, but because we have a high property tax, they're getting hit. And
Mhm.
that's the hard thing about property tax is, it's not based upon your wages. So if your wages don't go up, but your property
Well,
value does go
like
up,
retirees with fixed incomes.
yeah.
Hmm.
And I mean, we have a lot of. I mean, we help seniors out like crazy. There's so many programs to not increase taxes on seniors, but who's getting hit are young people and working class families, and
Okay.
so those are the ones that are struggling. And so you see a lot of those people trying to go somewhere else,
Mhm.
and it's there's not very many good options out there right now to, if you're young and you're a working class family trying to make it. It's getting very difficult.
Yeah. I see a lot of people like flocking to Ohio and like those flyover states that have, 50, $100,000 houses on like in decent neighborhoods. I've seen some interesting things in the news that, I brush over on the basement, but I think they matter quite a bit. It was Tier Partners. I think they own like 90,000 houses or something like that. And
Yeah.
then Blackstone were
State Street.
layering, yeah, they were layering like billions of dollars into Section 8 housing for the perspective of Section 8 kind of exploding and more people needing it. And then Trump comes out at the beginning of this week saying that he's going to interject himself into the Section 8 program. Can he even do that? Like, is that something that he can actually pull off as the president? Is there any stopping this Section 8 takeover? Like,
And Trump can do whatever he wants. All right.
okay. I like it. Yeah.
Lord and Savior Donald Trump is going to save us from everything.
Well, you've seen where he's the Pope or whatever. Where
Yeah.
people are losing their mind on that.
They can't add the Fed. He can't end the Fed, right? I mean, that's
Well,
he can't do.
If
And
he
can't
does,
speak
it'll
the
cause a massive crisis.
Yeah. He can't do that, and then he can't release the Epstein documents, so he can't do everything.
There's two things. There's two things above God: Israel and the Fed.
Oh my God! You're bringing out the Crusader.
Get anti-Semitic in here.
Yeah, and it's just like, seeing that Section 8 bet, and then Trump's like, no, we're going to stop Section 8 from doing this massive rollout. I mean, Blackstone, Larry Fink's inception, a lot of deep ties to big decision makers in the economy. It makes something, kind of go off in my head, like, maybe there's an internal battle happening there. Because he could like do away with the Section 8, but that wouldn't necessarily mean that like the interest rate on houses has to come down. It doesn't mean that the entry points for the average person become easier, right? Like, that's where my mind goes, is like, how the hell to save the lower and middle class that want to own a home? It's like, it's becoming very, very difficult to imagine. Like, what do you say to someone that's trying to get into the housing market?
So I'll put my little perspective. I just ran for the mayor of my city. So my experience with that is boomers vote, the other generations don't. And so all policy currently is geared towards helping that generation. Unless our generation start voting, we are going to be annihilated financially on everything. Because right now they're going to do everything they can to keep the housing market up, because boomers are the ones that own the homes.
Mm-hmm.
If there's a huge hit to that, I mean, that's going to be a really big hit to congressmen and trying to get reelected. And the reality is though they're the ones that come out and vote. They're the ones that get all the policies. So everything is being geared towards what benefits them. Mm-hmm. And so until our generation wakes up and starts actually voting and gets out there and removes people that continue to make policy, like this decision to throw all these kids that were told by the Biden administration they didn't have to pay their student loans. Mm-hmm. Now this week, Jeff, that they have to now start paying, or they're going to get their.
Yep. This week, 5.3 million student loans that are in default are being collection action started up to and including wage garnishment.
Holy shit.
And that's as AI's replaced most of their entry level jobs, dude. Like, holy fuck.
Yeah, the AI are replacing all the gender studies jobs.
Yeah.
I think there's there's a lot to comment on, but going back to kind of Drew's initial question about rates and is it a good time to get in real estate, and then the stuff
that's the big question. I mean, somebody makes a bunch of money in crypto. I would now be a good time to get into residential or commercial real estate.
I think it's a strong no. So here's why. So first of all, gosh, it's going to be a random answer. But first of all, we've gotten in this position in a lot of ways because of massive thumb on the scale by the Fed, by Congress, fiscal and monetary stimulus. Even when it was looking back, when it was well past the time to start raising rates. So like we should have been raising rates in like 2011, 2012, 2013,
Absolutely.
taking a recession in the normal course of things. But instead, we had this massive money printing, asset inflation. All kinds of things have happened. So here's some facts I looked up. So 55% of all homeowners that have a mortgage at 4% or less. Mm-hmm. Okay.
And
so when you have policies through financial repression that artificially keeps rates really low, and then smartly, the American, and actually this happened worldwide, but particularly here because we're the strongest, biggest economy, when we take advantage of that in the form of mortgages, you've distorted the market so much. It's sort of like when a drunk fish like swerves, right? You end up overcorrecting to the other side. You start fishtailing,
right?
Theoretically, Um,
Allegedly.
allegedly. So my point is unfortunately, I mean, maybe we get lucky with some really smart policy, but I think the only way to get out of this mess in the short to intermediate term, because long term the markets will fix themselves if we left them the hell alone. But the problem is what that means is probably everybody that owns a house that can afford to keep it, even if they want to move, is going to move, pay an $1,800 a month mortgage, and charge $3,800 for rent.
Right.
We're moving into a renter class society because we've created a generation of owners that got such a damn good deal they can't afford to let it go. They don't want to let it go.
Mm-hmm.
So what I would do if I could just wave a wand is I would have mortgage programs for the lower middle class to middle class that are trying to get into homes that had subsidized rates and leave rates high for everybody else so that it could start to normalize faster. Now, I'm sure there's unintended consequences with that, but one of the things that I think is really challenging, so going back to the commercial real estate, somebody made a comment. I looked this up while the chat was going on. There's roughly $5.5 trillion worth of real estate that's going to have to be refinanced in the commercial space over the next 4 years. Right. And most of that is being refinanced from, 2, 3, 4% to 6, 7, 8%. And for a lot of commercial real estate, commercial places, that's literally going to take it from being a viable business to a liability, and they're going to hand in the keys. So I think we're going to see a pretty significant, maybe not a complete collapse by any means, but we're going to see significant downward pressure price-wise in commercial real estate, particularly in certain segments of the economy and the markets.
Even
right?
from where we are now. I mean, because we've already seen 100 mil turn to 40 mil in a lot of different sectors.
I think, yes, I think, well, it depends. I'm sorry, let me rephrase that. If rates stay where they're at, if rates stay elevated. So that's problem number one. Problem number two, although this is actually weirdly why I also now I'm finally getting on the Bitcoin train. I know I'm like a decade too late, but my concern the entire time wasn't the concept of Bitcoin or crypto. It was that, you have these, particularly the first generation of Bitcoin folk, or like the true believers of like, we're changing the world, new currency, government neutral or anti-government, but government immune.
Anti-Fed.
And I'm like, you're telling me in one hand that the man is this like greedy oligarchy, keeping you down, wanting control. And they're the people that still make the laws. And then you're telling me you got this thing that will avoid that. Why wouldn't they just with a stroke of a pen outlaw? And I think what happened is we've reached a critical mass in the last several years where the big guys would rather make money than even control is one step lower for them than money. And so they're like, well, if you can't beat them, join them. And now that we got BlackRock and Blackstone and all these people institutionally moving into Bitcoin, I think that provides a significant level of regulatory cover. So I feel pretty confident long term. Short term, though, if you remember, the Fed tried to cut rates twice last year, once in September and once in December. Now in September, rates went down for 3 or 4 weeks, 4 or 5, and then they kind of they reverted. The second cut, instantaneously that day, rates went higher in the bond markets when the Fed cut rates. So one of the things that people don't, and by the way, when I say people, I probably should include myself here.
So translate this for people like me that don't understand.
That's exactly what I'm going to do. So at the biggest picture, and I'm sure there's all kinds of levers and things that I'm missing, but at the biggest picture, when people talk about the Fed cutting rates or the Fed rate, what they're actually talking about is the overnight rate. It's the rate that that the Federal Reserve charges a bank to borrow money. So let's just say I'm Bank of Reddick, and I lend out $300 billion that day. I mean, that's a little bit too much for you. I mean, at $300 billion, but I only got $290 billion. I can take $10 billion from the Fed overnight to make sure I'm whole, and then replenish that when cash flows come back in, right? So it's meant to smooth out the operations between all the different banks all over our economy, and it's a good idea, and it's not a terrible thing. It's why we don't have runs on banks, quite frankly. However, generally speaking, the lower the Fed rate goes, the more margins a bank has, right? Because if you're borrowing at 4 and you're charging somebody a 6% mortgage, you're making 2. Whereas if you're borrowing at 2 and you're charging somebody 6% mortgage, obviously you're making 4.
Mhm.
So in general, the Fed rate drives down rates in the marketplace because some bank out there, like so my bank versus let's say Taylor's bank might go, well, you know what, I'll pay 5% on a CD instead of 4% on a CD like Jeff is. And so it drives competition because everybody is going to the same pool to get that very first layer of money or marginal money. And it lets banks, so the lower the rate is the banks borrow at, the less they have to charge you on things to make their same margins. That being said, mortgage rates are primarily driven by where the 10-year yield is at because mortgages are packaged up and they're sold as mortgage-backed securities. And the investors generally want a 1.5% to 2% spread above and beyond what they can get guaranteed from the United States government.
Mm-hmm.
So if the 10-year is, so if the Fed cuts rates, right, which is what happened, let's say in December, but the 10-year immediately goes up, okay, that's basically the bond market going, yeah, Fed, I know you want lower rates in general, but lower rates encourages more borrowing. And we're not so confident on the ability for people to pay us back at the rate we're getting. We want a higher rate to compensate us for any additional perceived risk. So there is not a direct correlation between what the Fed does. It's a relationship, but it's not one-to-one between what the Fed does and what the 10-year Treasury market does. And if the 10-year Treasury market goes up because of uncertainty, because of concerns about this administration and how volatile they are, because of whatever, if the 10-year goes up, so do mortgages. So I think right now, I think it's likely that we're going to go into recession. And this to bring this full circle, I'm starting to get a DeFi because I'm being drugged head over feet by these gentlemen, right?
Don't make me fly out there.
But I do think that we're going to see. I think we will see a significant buying opportunity in crypto in the next 6 to 12 months. Maybe not Bitcoin necessarily, but overall crypto, because the average crypto holder still the highest holding segment are people in their 20s, then it's your 30s, then it's your 40s. You get to 50s and it's less than 10% of people that own crypto. Now it does skew a little bit more. I was surprised in the 30s in the 30s and 40s to higher income households. But my argument is this. I think a recession's coming. And if we have and I think a recession, and maybe not this year, I think it will, but maybe not. We may avoid it depending on what happens with tariffs. But Taylor and I both think an AI-driven recession's coming. And when that happens, what's going to happen is we're not going to have a layoff where it's, and I'm not trying to be
doomsday
respectful to any kind of person's job because most people do jobs a whole lot harder than I do. But there is in this country kind of the recession hit the carpenters and the construction workers and the factory worker, like there's a slowdown, but most of the time the white collar jobs are spared. I think AI for the first time in a really long time is going to have us experience a white collar job recession.
100%. I agree.
And the problem with that is if you make, let's say as a household, 150, 200 grand a year, but you still got the wife, the 2 kids, the dog, you still spend almost all of that. And that's the economic activity that keeps everybody else employed. And so what I want to see, and I'm not saying by any means that they couldn't do this first, but I mean, I'm not an expert in crypto compared to anybody on here, and certainly compared to Drew or to Mike. So I'm not saying you shouldn't invest in it right now, but I am saying the real test for how resilient these are, Bitcoin is one animal. I would say there's the top 2 or 3, 4 largest held coins are the next, and then all the other stuff, right? I'm really curious to see how each of those categories do when all of a sudden guys are like, yeah, man, I don't really want to sell. As you say, I'll try to be part of the lingo. I'll be a cool kid. So I don't want to sell my bags, but I got to pay rent and I haven't had a job offer in 4 months.
Right. And there's a lot of people like that out there right now. I mean, on LinkedIn.
I think that's where you're going to see the pricing. Now, I don't think that's that's a death nail for the industry, but I think we're going to see another significant drawdown because people are going to need liquidity, and most of the time you can't pay your rent in crypto, right?
So,
You can't go to grocery
basically, what
stores
you're
in crypto.
saying is that people should learn DeFi to augment their income.
You know what? That's what I think you think I'm saying.
That's because I know what you're thinking.
There's a lot to think about though here, and it's something that I've seen coming down, and it makes a lot of sense. Honestly, like I saw when AI first came out, we had a whole graphics department. Then within the first week, I was able to figure out the prompts, and then we got hit with a bunch of lawsuits with having to get rid of someone that committed a lot of fraud, and like it's changed. Things have changed, and I'm able to produce what an entire team of 10 graphic designers used to be required to do in
In a
5
fraction.
minutes.
Yeah.
You
Crazy.
know?
Yeah, the
Um,
thumbnails, just the thumbnails for the shows.
yeah. And so not to mention like I started this in research, and thank God like I had built up to the point where I had like my own brand and personality on air. 'Cause it was literally whittled down to just like personality and like because you can get the research done in an automatic fashion and a lot of different things. Um, this is a lot to consider though, and I'm really glad that Jeff, you clarified to me that treasury relationship with the mortgage situation is why we're seeing the Fed fund rate be at that 4% spot, but we're still like 6.8 or 7 on the mortgage side. That was very,
Right.
very helpful for me personally, because I'd taken a lot of data and I'm just sitting here getting aggravated looking at that, mortgage thing. It's kind of the it's and what you asked, or like the altcoin sector, I do think is going to experience its own personal next nuke. I don't think that necessarily means Bitcoin's going to have the same level of pullback, but altcoins, they are like we're in like the first cycle where Bitcoin's being adopted by force. It's like the immovable object of the U.S. government met the unstoppable force of decentralized finance, or like this unstoppable world computer where people were swapping, and so it's like this clash of these two titans, and this is the first cycle where that's happening. And I think next cycle is probably where we see the altcoins that really start to find their stride and really start representing bank note or house notes and things like that come into play. But you're bringing up a lot of stuff that really, really matters for like we're in altcoins and Bitcoin and we're going to make money. But the only solution that I've come up with to how to house that value after seeing all these different metrics is Bitcoin. And, that's it is what it is. That's where the aggravation, like I wanted to expand into the real estate market. Like, I'd seen my parents do really good with real estate.
Let me go into that a little bit. Why that's real estate's not going to be the future really for investment unless you get a really good location.
Well, after you're done with that, Taylor, if you guys could, I mean, since real estate, isn't a good play, like maybe play out a scenario if somebody had $100,000 in crypto
Yeah.
profits.
So,
How would you guys deploy that?
So, and this is known in most of like major circles. So real estate requires population growth, and it requires working class population growth that we're going to have. Well, we have two big problems. In 2030 is where we will start to see the big swing where America is going to, unless it can really increase, well, we would already have it. If we weren't bringing immigrants in right now, we would be having a population decrease. The Trump administration pushing hard to stop immigration plus AI is going to cause a significant decrease in immigration. So we're going to start seeing this trend where our actual population will start going down, like China, like all the rest of the world. Like you go to Europe, like that's why you can buy a house so cheap in Europe right now. They have population decline. That's why they're bringing in all the Muslims. That's like they have to have immigrants, and that's the only people that want to go to Europe and live there. So we're going to have that in America unless we change our immigration policy. That is a big argument for why Biden's administration basically was letting people run across the border illegally, was they're trying to fill up the country so we don't have a population decline. But people are against that. That's not going to be okay with people. So we're going to see the opposite thing happen. And so when that starts happening, and it was projected around 2030, that's when we were really going to start feeling it. Because you got the baby boomers dying off, the new generation coming, and they're not going to be able to pay the prices for the houses. It is the reality. So you have to go where your generation gives you an opportunity. The boomer generation, yeah, it was real estate, but really, it's their parents was real estate. Their generation, it was stocks. It's not. Stocks are not going to be our future. The the market. I mean, they can keep inflating it with inflating the currency, but basically, that's the growth of the market has been since what 2008, Jeff. If you basically, it's been increasing about
Right. I mean, it's 2009, right? I mean, that's when it bottomed.
Yeah. And so it's like at the end of the day, our generation, it's crypto or bust. I mean, if that doesn't work out, maybe some AI thing comes about that you can invest in, but this is really your opportunity.
Yeah, I mean, this is something that's like it's changing so much about what I grew up thinking, and that's why I just kind of have to ask the weird questions. It's not the most exciting question, but I've seen my parents really do well with it, and they weren't like heavy into renting. They like kind of dabbled into it more so. They bought ahead of growth, like the suburbs around, Denver,
Yeah.
and buying that kind of auxiliary position did really good. And I'm in a basically the same type of situation here in Atlanta. I'm like an hour outside of Atlanta, and the areas that I'm in, I am seeing like the millionaire class out of Atlanta start to decide, hey, I don't want to hear gunshots every night. And so they're starting to look at the suburbs. Now they hear gunshots, they know it's just fucking the hillbilly down the road shooting cans instead of some gangbanger. You know what I mean? So it is happening, but it's a matter of like where I house the value that matters a lot. And that's where, really thinking about this concisely is going to be pretty important for me because I think we've found the right things in our right stride in the right positions, the right entry points. But I absolutely am going to be jeeting basically every single altcoin position that I have at a point when I see the dominance rise to certain levels because it's only there for a short amount of time, not a long time. These altcoins versus Bitcoin, like Bitcoin is acting like this black hole of value to the world because of all the problems you guys just described. I go into them on my show as well because these macro implications and the commercial real estate losses that are sitting on these banks right now, the amount of debt that has to be refinanced is coming down the pike. And, this is something that I have to take very, very seriously when it comes to where to house the value. Because I don't want to just put it into real estate and end up leaving a lot on the table. You know what I mean?
Well,
AI is unstoppable.
well, that's my question, and I know a lot of people out there because that's what we've all been taught is if you have a bunch of liquidity, that a good safe play, and everybody I knew growing up that mentored me made their money in real estate,
Mhm,
and that's what I did for years in the military was I got into properties,
mhm,
but so if real estate isn't a good move, right now, and potentially in the next year or two, if somebody had $100,000, if the markets pump, crypto pumps, people take profits, and they have a couple $100,000, how would Jeff, you and Taylor, how would you deploy that to lock in that value and earn yield to grow their wealth?
Well,
So I'm
that's
sitting
an
across
easy
the desk from you
question.
in your office, Jeff, and I'm like, I just hit the crypto lottery. I got $500,000.
Well, so, and I guess this is why all the disclaimers come in, right? Because it really depends what you're trying to do, right? Have you hit your nut and you're just trying to protect it? That's a completely
mhm,
different
Yes,
thing. Okay.
100%.
I mean, I would, wow. Okay. So for a lot of my clients, obviously a lot of my clients are retirees, and it's more about maintaining a lifestyle, hedging against inflation, and mitigating loss, right? They don't want to have another 08 or a 2022.
Perfect.
Why I use a lot of principally protected strategies. Now, one of the nice things is that could be as simple as, laddering treasuries and CDs right now. I think one of the challenges you have, though, coming from the crypto world has nothing to do with whether crypto is a good idea or not, nothing to do with whether investments are a good idea or not. And by the way, Michael Moore was mentioning stuff in the chat. I do think real estate's a good asset class. I just wouldn't buy it right now, and I certainly wouldn't buy it willy-nilly. There's always going to be opportunities in any given sector and any given market. It's just everybody that owned real estate in the last decade made money.
Mhm.
You could be an absolute moron, close your eyes and throw a dart at a map, and you made money in residential real estate, for example. I don't think that's going to happen going forward for a while. So going back to your question, principally protected strategies. I like structured products as long as they're not too expensive. Structured products are basically options that have been packaged at a bank that looks like a CD. So it'll say like, hey, for the next 18 months, you get paid the lower of the S&P 500, the NASDAQ, and the Dow Jones. Whichever one grows to the lowest amount, will pay whatever it grows up to 20%. So if the market goes up between now and 18 months from now, 10%, I get all the growth. It goes up 20%, I get 20%. It goes up 30%, I'm capped out at 20. But if it goes down, a lot of these strategies either have a buffer, which means you'll lose some of your money, or some of them are even principally protected completely, which means you lose none of your money. So you can create basically, I mean, this is not by any means original, but buckets, right? You could say, okay, I got 3 months in cash. I got 6 months in a high yield savings account earning 3 to 5%, depending on if you want to be online or not. I got another year in laddered treasuries. After that, I got structured products for years, 18 months through 3 years. And so you can build yourself like a 4-year bucket where it doesn't really matter short of Armageddon what happens in the markets. You're going to get paid what you're going to get paid, right?
And DeFi, of course.
But you just said you implied you wanted to get out of crypto.
Right,
so
right.
what I was going to say is, I think one of the biggest challenges is going to be, and I think this is one of the reasons we'll see a correction at some point. And it's not because the fundamentals of crypto are problematic, but crypto is brand new. Humans are real damn old, right? Our wetware changes very slowly. And we don't if you tell client XYZ, hey, Mr. Smith, I'm going to give you a portfolio that's going to give you a very stable 6 to 10% rate of return efficiently with low taxes. And he's like, I make 10% in a day. You got a problem reconciling that behavior, right? It's like trying to take somebody that I don't know if anybody here plays poker or plays poker in the chat, but whatever level you play poker at, whatever your buy-in is, going to a different game. So my buy-in, my poker group, it's $200 to $300, $400 sometimes if it's a really expensive game, but people will buy back in. I can't get anybody in that group to come to my house and be like, hey, it'll be a $50 tournament. It's the same game, but the stakes aren't high enough. They just don't want to play for that. So I think there's going to be a lot of people that will not get out at the top for the very reason that when things are still working really, really well.
Well, that's because they're investing off emotion and not logic.
Yes, and I'm telling you,
and that's the key. I think it's diversification. It's diversification. You need to have some really low, maybe 6%. That's just
100%.
Nice and steady, and then have some plays. Have some higher APR plays, but with a smaller portion of your portfolio.
Yeah, so it's called what you're talking about is called a barbell strategy. So you have you have some really, really conservative stuff, so that you can ride the volatility wave of, because imagine if you were retired. Well, you kind of are, right? But let's say it's somebody that wanted to really be exposed to crypto, but they don't necessarily want to risk their retirement. We build that 3-4 year bucket of complete stability, but let's just say that takes 30% of their wealth to do that. You have the other 70% in a diversified crypto strategy, but for argument's sake, to make my life easy, let's say it's Bitcoin, right? And let's say we did this in 20 20. They could have taken Bitcoin, they could have ridden it up to what, 65, down to 15, and back up to like 104 or whatever we're at now, without any, I'm not going to say they didn't have any stress, but without having to face the decision of, do I sell some of that money? Do I sell some of that coin to get dollars so I can fund the rest of my life?
Mhm.
So what a conservative portion does is it buys you patience, basically. It buys you capacity to ride the ride. And so if you are a long-term, Bitcoin maxi or crypto maxi or holder or whatever, you need to fund your short intermediate term so you can afford to be long-term.
Mhm.
Right?
That's how I've ridden out this market recently with lending and full range liquidity pools. Is I don't have to worry about price, and it's just slow, steady money, and it's kept me sane to where, like the ranged pools that I have that were out of range, I didn't freak out about it. I didn't like rebalance them. I didn't pull that liquidity out and put it somewhere else. I just left it there, and I'm about to go back into range now and start earning on those.
Mhm. Yeah.
Now, I do think something else that I just want to make sure we touch base on before. I don't know how long we got, but just everybody needs to be aware that basically there's nothing you do in crypto that monetizes in any way, shape, or form, whether it's exchanging coins, airdrops, DeFi, yield farming, whatever it might be. All of that is going to be taxed at your highest rate. And right now, you get really lucky because you can day trade all you want and you don't have to worry about what's called a wash sale rule. So in stock, there are stories of folks, for example, back in the tech bubble, the first one, 99, 2000, right? People were quitting their jobs and day trading.
Mhm.
And that worked out okay, made a lot of money, paid a lot of taxes. But if you're making a lot of money, you don't pay a lot of taxes. But then you had kids in 2000, 2001, where they're trading. Of course, then they're doing this from their mom's basement kind of thing. It's not like they went and got licensed. So
You
they're
mean
trading.
2021, not 2001.
No, 2001. I'm talking about I'm not talking about crypto. I'm talking about regular stocks. 2001, because this
People
can
were
happen.
trading in their basement in 2001.
Yeah, dude. Don't you? Yeah, AOL.com and Ameritrade, all those things, dude. It was crazy.
You're
So
old.
here's what I'm getting at.
You're old, Jeff.
I'm old. I'm 48. So what I'm getting at though is there
I'm the
were
oldest
people
one.
that literally had $800,000 or $900,000 worth of trades,
Mhm.
but only like 80 grand a profit. But
Mhm.
when they went to get their taxes done, they're like, well, you bought and sold Enron 15 times in a month. So all those losses you took are not allowed to offset those gains. And they had to report $800,000 worth of gains, even though they had 100 grand worth of actual money in their bank.
Mhm.
If they change those rules, which the Treasury keeps trying to do, if they change it to make crypto like stock, that's going to very significantly change what people are doing in their behavior.
Yeah.
And people
Yeah.
have to pay a lot more attention to the tax situation. Right
Yep.
now, it's still, nobody really cares as long as they're making money. But if they change that rule, you can literally lose money and still owe taxes,
Right.
which is a hell of a combo.
Man, regulatory frameworks, huh?
Yeah,
Like
dude.
a rape work right there. Jesus. That's something to think about for my trading career right there. Holy God. Oh man. Yeah, lots to think about there. Lots to think about there, man. Well, I mean, basically, I feel like there's no other option than Bitcoin. I just, I don't really feel any other major thing. I'm gonna hold my mortgage amount. If I get another house, I'm just gonna pay it in cash and then what do I do with this 3% rate? Because I came after it.
Keep it.
What's
So,
Keep
that?
it.
Keep
Keep your
it?
3% rate. Yes.
Yeah.
well, Taylor, let me ask you this from a legal standpoint, from a
Yeah.
from a estate planning standpoint. What is some ways that people out there could, because no matter what their age, there's things that you can do. When you start amassing wealth and assets,
Mhm.
what are some things that people can start thinking about and doing to maybe mitigate their taxes or protect their assets and things like that using wills and trusts and things that you're a specialist in?
So it's hard because every state does things differently to tell everybody kind of like on a national stage of like what you do. And so I actually tell people protecting your assets from lawsuits is actually not as big a concern as it is from like a long-term care situation. Like your biggest risk that you really hold is that you end up or your spouse ends up in a long-term care situation, not that necessarily you get sued. I mean, that's always a risk. You can get your car, but it's easy when you drive around. You have insurance. Like now, that depends on what your career is, what you're doing. Tons of different reasons why. Um, the harder part in estate planning is, especially with crypto, is the fact that there are no real good systems out there currently. If you pass away, or let's say your spouse is doing crypto and they have it in a wallet, if you can't get to it, you're pretty much screwed. I have I have a couple right now. Their son back in I think it was about 2014, had a ton of Bitcoin.
Mm-hmm.
He passed away. Nobody had access to anything. And they're consistently trying to figure out how to get access to that wallet.
I bet.
And so like that, I mean, that's one of the things that people don't really understand is like, yeah, there's only 21 million Bitcoin, but the real problem is those coins are getting lost consistently. So it actually gets more valuable over time, because people just don't keep track of it from one generation to the next. People pass away and they don't put their passwords down anywhere. They don't have any way for anybody to know how to get to anything. So in estate planning, if you are heavily involved in crypto, you need to take estate planning extremely seriously. Or maybe you're not so much. Maybe your parent is. Make sure that you're talking to your dad, that hey, Dad, I need your passwords for things, or I need to know where you put your passwords, because if you don't, you're really out of luck. And so a lot of people, you're doing this and you have kids, and you're wanting to make sure your wife and your children will be just fine when you're gone. Well, you need to make sure that you sit down your wife and, you can be like, Mike, when he comes up and visits us, he'll start vomiting DeFi on everybody. And my wife just shakes her head and goes, uh-huh, uh-huh. And then she comes to me afterwards and like,
he's crazy.
What is he talking about? And I'm like, well, it's like,
have you heard of my Lord and Savior DeFi?
And so
I'm going to testify.
getting, sitting down your spouse and being like, I really need you to understand this is how it works, and show them how it works so they can see. I just had a couple in. He was big in Bitcoin, and he's basically, they're retired now because in 2013, he convinced his wife to go all in on it, and they held through all the crap. And now he never has to work another day of his life. But his wife's like, I don't understand that. And I'm like, you better learn it, because it's going to get locked up if he passes. And so, but that would be my biggest encouragement is like, people who are watching this, you're in it. Just realize, you can make this huge.
You can get in a car accident, have a heart attack, and your family's screwed if you don't have, something, recorded. Or those things, those accesses, available to them, upon your death.
Exactly.
Absolutely, man. A lot to think about here. Yeah, I'm just gonna hold my damn freaking house. God, it's just so different. It's so different.
I'll tell you one thing I'm looking at for real estate is assuming older loans. So like distressed properties where people are, maybe, because of the price dropping, they are, stuck in these loans, but at really good rates. Being able to, assume those loans, might be an option.
Yeah, I mean, that people are making tons of money doing that right now. I mean, you can make a lot of money in real estate right now, but like Jeff said, it isn't the old way where you just buy and you will. Like you gotta know, is this city gonna grow? If
Right.
AI really does take 50% of white collar jobs, are these suburbs going to become, ghost towns?
Mhm. Mhm.
Because like where I live, people live here because of jobs, not because we have nice mountains and ocean close by.
Right.
Storage units. I'm build
Yeah.
storage units.
So
I was thinking about that for a business, dude.
Yeah.
I mean, seems pretty nice to me for a business. Storage units, people are going to keep buying crap. They don't need
Low
it.
maintenance. I mean,
Je-
super low maintenance.
Jeff
Employees.
knows that industry
storage
better than anybody.
storage was the best performing subclass of real estate for 3 decades.
Mm,
Nice.
From at least 3 decades, from the 90s through the 2020. However, I do think it's finally really overbuilt.
okay.
A
Okay.
lot of
But the reason why that was brilliant, because like you think about it, right? You don't have like there's no toilets, there's no pools, there's no weight rooms. You don't have to paint. I mean, it's just
Mhm.
it's concrete and aluminum or whatever siding, and your margins. Like some of these places I've invested my clients in because I do a lot of alternative investments. Some of these places, their gross margins were like 65%,
Mhm.
right?
Mhm.
Before, and then you get through other stuff, but just fantastic. They were fantastic. I'm not sure that they are now because at least in a lot of metroplexes, you can't go past a major, I mean, just within my home, I can probably think of 5 within a mile.
Mhm.
Like, and I don't live in some, I mean, I live in a suburban area, right? Or
Mhm.
suburban area, but it seems I'm much less convinced it's a good idea. And I do like data centers. I mean, compute's only going to go up, right? I like wireless 5G towers. There's things. Um,
Energy. I mean, if we're going to build these AI places, have you guys
energy.
seen
Yeah.
the amount of energy that needs to be built out?
and
It's
data centers are so. 10 years ago, I did an investment in a data center. I mean, 10 years ago, I helped my clients get into an institutional investment in the data centers. And at the time, the rent for the data center at the time was
Mhm.
$2,000 a square foot.
Mhm.
Now, granted, you're getting racks right on there, so you're getting a bunch of different. But those things. That's not. You don't just throw those things up, man. They're 2 foot thick walls that are electromagnetically shielded, and they got power cables that are like this that are buried, and they're meant to withstand F5 tornadoes. I mean, like if anything's ever coming at you in your town, go to the nearest data center and
Right.
throw a brick through the front glass and get inside because that stuff is built to last. But it's
Interesting.
expensive as hell. So
Yeah.
they need lots of capital and they raise it from investors. So I do
Uh,
like that.
there's no denying that there's going to be trillions coming into data centers in the U.S. You know, that is something very, very interesting to think about. It's like,
Well,
what are we
maintenance.
going to do? We're going to roll out all this AI stuff, and to power the AI, we need to increase. Like honestly, we need to build a bunch of nuclear reactors. I should just buy like an
100%.
electricians, right? Maybe electricians or structural concrete companies might be a move I've been thinking about.
I think you want to talk about good jobs, long term projects, a ton of stimulus. The government should have done for power plants what we did for the moon race in the 60s.
Mm-hmm.
Obama, then Trump, then whoever was running Biden, Trump. Somebody needs to come out, get in front of a microphone, and say, "Hey, we're going to build 10 nuclear power plants for $1 trillion over the next 10 years or 2
Mm-hmm.
trillion or whatever it's going to cost.
Mm-hmm.
This is what we're doing." I mean, it's by far the most efficient means. Oil
Mm-hmm.
is we are gonna run oil eventually. Right. And something else that's stupid as hell, just since I'm on my soapbox. I know you can't see it, but there's a soapbox right here and I'm standing on it. We have like the newest refinery we have in this country is like 3 decades old.
Right. 100%.
So we are one 9/11 event away
well,
from all of a sudden not being able to operate as a country because
Mm-hmm.
we
Jeff,
have to refine it.
Jeff, we have 0 point energy. All right, so we don't need that. The government knows it. They're not worried about it. It's just whenever we decide to stop, giving Saudi Arabia all that money, and we just go and we have those UFOs that are flying around. You know how much energy those things take to fly? It's like
And what's sad is
10,000.
half of me knows he's joking, and the other half of me is like, he's actually got a really good point. But either way, I'm
Um,
telling you, we should have built power plants. Because that's what, at the end of the day, get rid of the politics. Most people, what do they care about? You want clean water. You want your food. You want your
Yeah.
power. I want myself, I want to be able to make a call and the dial tone works. Like, you want the basic crap taken care of. And I think both parties have done a really piss poor job of that for a very long time.
mhm. Yeah. I mean,
Well,
this
I
is
know,
Visionary.
I know you're all busy. I mean, I'd love to talk for hours because I mean,
no,
this
I
is
mean,
all
I'm
great
loving
stuff.
this conversation, and I mean, I could keep going because I used to hire for the heavy industrial construction industry. Like,
Well, let's keep going. Just feel free to let us know. If any of you got to go, just let us
Well,
know and we can wrap it up.
I got to jump to our Jeff. Are you in our next meeting?
I believe so.
All right, so we got to jump. So let's just do it a different. We'll come back a different time.
yeah,
We'll talk.
yeah.
We'll
I mean, this
follow
is a good combo. A good
Well,
combo.
let's do some closing thoughts real quick. Taylor, real quick, closing thoughts.
The world's completely changing. It's going to be incredibly hard to know what to invest in. Nobody really knows right now because it's heavily dependent upon how AI is going to change everything. But if you want to get into real estate, you got to look at demographic trends. You got to look at the area, and you got to start asking yourself really hard questions like, okay, if AI does take 50% of jobs, white collar jobs, is this a viable place where people are going to live?
Mm-hmm. Mm-hmm.
And those are the things you want to look at. But real estate will work if you pick the right location.
Perfect. Jeff.
I would say if you're inclined to invest in crypto and probably most specifically Bitcoin as a long-term asset, invest in that, but do your financing, not your DeFi, but your actual personal financing. If you believe inflation is going to still be a problem for the future, which I don't really see how it can't be. I'm not saying that we can't have intermittent periods of deflation depending upon economic situations. But when you look at the debt we have in this country and around the world, I think inflation is going to be significantly higher for a long period of time than it has been in the last 20 years. Which means if you can get a relatively good rate on your life and price it in dollars, that's a really good thing for you because you're going to be paid. So, for example, a 3% or a 5% or even whatever mortgage you have, your dollars theoretically are going to buy less and less other stuff every year, but your dollar amount you got to send to your mortgage every month stays the same, right? So, for argument's sake, to make my point, if your mortgage is $2,000 in 2025, and in 2035, $2,000 in 2035 buys what a grand does today. In effect, you've cut your mortgage in half because you still have to give $2,000 a month to your mortgage, but you're only giving up $1,000 worth of purchasing power looking at it from today versus then, right?
Nice.
So it becomes, in a ridiculous world, if I got a mortgage today for $2,000 and year 29, I'm paying the very last parts of my mortgage off, and $2,000 is what it costs to take 4 friends to a dinner. Well, then I'm definitely happy I kept my mortgage and paid that level rate that whole time. So if you think inflation is going to be here as a future problem, which would be very difficult to make the argument that it's not going to be here at some level, then you want dollar denominated debt, but you want your assets in other things, stocks, crypto, raw land. God doesn't make any more of that, whatever. Something that's going to be an inflationary hedge.
Awesome. Drew, closing thoughts.
And the Fed collapse down, beat the rush, and treason should be punishable by what it actually should be. I think
I like it.
I think there's a lot of stuff that we could do. I just want to rip the Band-Aid off and get this fucking candle lit.
Collapse now, beat the rush is awesome. I need to tell
yeah.
Jesus Christ.
Agreed.
Good.
All right. So my closing thoughts is get your plan together now before the markets start to move. If you're in crypto, the markets are starting to move. You can feel the energy. Before you get emotional, get your ladder out plan figured out. How you're going to take profits as the price is going up. Do
Mhm.
it now before you're emotional and stick to it. As you're pulling profits, have a plan in place on how you're going to deploy that liquidity and diversify in a way that is going to ensure that it's going to earn you yield that's going to outpace inflation.
Yeah.
It's important that you leverage things like DeFi, like Jeff was talking about with, stocks and bonds and, these securities, all these different things, these mechanisms. And, reach out to Taylor and Jeff, and they might be able to help you. I know that I wanted to touch on, they actually do seminars, really informative seminars on investing in things. So, um, get your plan together now so that it is ready and actionable so that you can ensure that you don't round trip your profits.
Mhm.
So, with that, thank you, gentlemen, Taylor, Jeff, Drew, for taking the time. Taylor, Jeff, let's make this a regular thing. And Drew, I would love to have you on as well because I want to continue this conversation.
Yeah, no, I'll definitely make time for it, man. It's this weekend's nuts and I'm still able to do it. So I mean, I'm sure we can keep doing this week over week. Absolutely.
All right.
Awesome. All
Thanks,
right.
guys.
Well, until next time, Veteran Crypto out.